They make millions in a single deal. They never lose. They're glorified and they're demonized. You've heard all the hype around investment banks. Now let's talk about what they actually do. Let's start simple. The bank that gives you a home loan or a savings account, that's a commercial bank. But investment banks, they help companies raise money, buy other companies, and sell ownership to the public. They're more like financial power brokers, but they weren't always this powerful. Investment banks go way back. In the 1800s, they financed railroads and wars. They were the risk takers when the commercial banks played it safe. But after the 1929 crash, things changed. The Glass-Steagall Act of 1933 said, separate the gamblers from the savers. Fast forward to 1999, the wall comes down. Since then, investment banks became mega machines, profitable, powerful, and sometimes too powerful.
What in the world is happening on Wall Street?
It was the worst day on Wall Street since the crash of 1986.
A lot of the customers are freaked out, waiting to see how the transaction
You can't look at it after you buy it. It's so horrible.
But now it's official, we are in a recession.
But let's actually talk about how do they make money. See, there are divisions in investment banks. There's the investment banking division. These are the high stakes deal makers. They advise on M&A, IPOs, and big deal restructurings. When the Disney Fox merger happened, Goldman Sachs made over $150 million. Then there's the capital markets division. When companies need money, investment banks help them raise it by issuing shares or borrowing via bonds. And the banks, they take a slice for arranging these funds. Underwriting fees, success fees, you name it. From managing trades for the client and taking a piece of it, to managing wealth of HNIs, pension funds, and even governments, and charging a percentage of their total assets managed. They make money every way possible. Just like every big decision on Wall Street starts with one thing, information. These banks too publish in-depth research reports on stocks, sectors, commodities, currencies, and on entire economies, some of which are public, while some are not. But wait, if they're so useful, why do people say they're evil? Because while the world was burning in 2008, investment banks still made billions.
Paid out $33 billion in bonuses.
And those who didn't, they were pulled from the wreckage with the hard-earned taxes of the very people they helped put out of work. Some say they caused the crisis by creating these complex and toxic financial products and by betting against their own clients, knowing full well about the collapse that they were heading towards. And yet, without them, many parts of our economy wouldn't run. Hope this video gave you a better understanding of the investment banking industry, how capital is raised, risk is traded, and how profit is squeezed out of investors in the name of services. These aren't just banks, these are combinations of genius and greed, the engines of pure capitalism. Finance is not just for the elite, it's for the informed, and now you are a step closer.